The dip is over. Is it time to be happy again?
The Fed released slightly hawkish direction in reducing QE, but we won't be expecting rate rises until after June of 2022. So that got some of the uncertainty out of the way.
Besides FOMO meeting, we have big earnings surprise in Adobe and big potential fundamental change for Facebook.
We will also discuss issues in China. They've had a rough Moon Festival week, with Evergrande and Everdebt.
Before we get it going, be sure to hit subscribe so you don't miss our weekly content.
First company we want to talk about is Adobe, one of my preferred stocks actually. It provides subscription services such as Photoshop and Premiere Pro, which is what we use to edit this video. It is basically a monopoly in multimedia production software with deep barrier of entry. The stock dropped on Tuesday after earnings for about 4%.
They got a double beat though, EPS of 2.65, estimated is 2.52, and the revenue of 3.94 billion versus estimated of 3.89 billion. So overall, it is a nice report card. Not to mention guidance for revenue of 4.07 billion also beats estimated of 4.01 billion, and guidance for EPS is 3.18 also beats estimated of $3.
Fantastic score and outlook. And it still doesn't matter. Gotta knock that PE down.
This is really tells us sometimes if you don't look at a company in particular and you look at the market breadth, yeah, PE high can get higher, but you gotta realize all that PE is stacked by money. And at some point, money runs out and you are like a Ferrari with no gas to blaze.
Yeah, I agree. High PE requires high growth rate. No, correction. High and consistent growth rate for the next few quarters and even years. So clearly, the market is going to wonder, okay, if we keep pushing the valuation up, can this company keep up the growth for the next few years?
Exactly, so a lot of people are choosing to not buy it here. More people are willing to wait for a pullback for a friendlier PE. So if PE were to drop by 10%, the stock prices need to drop 10% too.
So it seems like right now the fundamentals and valuations are slowly taking control over from emotions controlling this market. Eventually, the market has to return to historical reasonable valuation.
Exactly. There are two ways the market can do that. First is sideways until the earnings of each company catches up. Or the second way, which is a pullback knocking the PE down.
So where can we buy Adobe?
Mm, right now, it's hard to say for entry since we are still in overvalue area. But we can give some supports. There are some support from 618 to 635, 600 to 610, and 585 to 590.
I see. And personally, I would wait for the 500s. But again, that's what? $100 below current price? So still a little far, and I would be patient.
Yup, there's another big company took an elevator down this week.
Zuck's Facebook dropped for almost 4% on Wednesday. The main reason is Apple's privacy update has made it harder for brands to put ads on Facebook.
It is not really news, but now confirmed by Facebook officially that the reason iOS privacy change that asks apps not to track is hurting Facebook's ad data reporting. Let's see if you are a car dealership, but your ads are being sent to teenager or senior citizens. Isn't that a waste of ad spending for you?
Yeah, that would suck. I mean, merchants will definitely start wondering if the effectiveness of their Facebook ads. For $1 spent, I think they'll explore other ad options with more accurate target audience. This means Facebook might have to lower its ad charges, and that will definitely affect the profitability of the company, especially with the holiday season coming up. E commerce, luxury brands, and others will be going ham with ads.
So if we look at Facebook's fundamentals, the valuation from a PE standpoint is not high. But that's all thanks to the fast growing earnings. And that's their keys to maintain a relatively fair valuation.
Right, and now they're expecting a clear slowdown in ad growth in Q3 and Q4. at least. That's why the stock price took a nosedive this week. So let's talk about some levels for Facebook.
Alright, if you think the privacy changes in the long run will have small or even no impact on Facebook's profitability, Facebook will still maintain its price setting ability in digital ads. You can look for an entry from 320 to 330. There's a small support.
And then from 300 to 310 is another small support I can see. And we have strong support from around 260 to 280. These are the levels you can build your positions if you're still optimistic about Facebook's profit growth.
Stock took a big hit on Monday due to the fear that one of China's largest property developers, Evergrande, could default on billions of debt. This could essentially affect the global economy. Now you may wonder, why does a single property developer in China have traders sweating bullets? Why is this so serious?
In short, Evergrande is sitting on a debt pile of more than 300 billion after years of unrestrained expansion. The way Evergrande grew to a market cap of 50 billion at its highest was by borrowing money. On Thursday this week, the company is due to make interest payments of 84 mil on a 2 billion foreign bond and another $47.5 million bond interest payment due next week. Both bonds would default if the company fails to settle the interest within 30 days of the scheduled payment dates.
Well, the company is in a serious financial trouble. This is all began from the new rules Beijing announced last year that would force the entire real estate sector to deleverage in order to improve financial health.
Yep, Evergrande is already in so much debt and has to offer its properties at a discounted rate to ensure enough liquidity to meet the requirements.
Many on the street said that this might be China's Lehman moment.
If Evergrande does collapse, I think it will definitely have ripple effects throughout China and even on the global economy.
Absolutely. And here are some of the top funds with the highest exposure to Evergrande bonds, according to Morningstar.
Now, all eyes are on the Chinese government to see if they'll help step in and bail out Evergrande.
I think they already rejected at least one bailout request from the firm's founder.
It's still very unclear on how the Chinese government is going to handle this. I mean, if they do step in and rescue Evergrande, that would go against their efforts to get companies to borrow less and to take some of the steam out of the property market.
This is one challenging dilemma. But one thing for sure is that the Chinese housing market will definitely continue to fall. All major indices bounced from critical support earlier this week. The Dow Jones tapped support around 33,550 and now testing upper resistance around 34,785.
Yeah, if we're able to break through this resistance, we might be able to continue going higher and to test the prior high.
Well, I hope that's the case. If we dip back down next week, this week's high might be a lower high, which means the trend is leaning more toward the downside.
And it's the same story with the Nasdaq. Bounced off from support around 14,810 and now only 2.3% away from the prior high.
As we mentioned in last week's video, the 50 moving average has been an effective support for the S&P 500, and we were able to reclaim it on Friday's close.
Yeah, we did. And looking at Russell, it's still bouncing inside the box. This has been sideways consolidating for a long time, and whichever direction it breaks through, it's going to be very interesting.
Yep, so make your bet now. It's Russell is pretty much been trading between 2,100 and 2,350 since 2021, which is this year. If this break out, this is going to be the biggest bull flag I have ever seen. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.